Hi, welcome to the Travelex Weekly Outlook for the week of October 24th. The dollar finds itself on mixed footing. The greenback did rebound from 6-week lows that it touched overnight against the euro and against a currency basket. But the dollar is down slightly against the Australian dollar, the Canadian, and the Kiwi dollars. Investor sentiment overall has really held cautiously in the wake of a Sunday summit in Europe on tackling the debt crisis. There were reports of progress on those talks, but the big decisions are still yet to come on Wednesday. That's when the European Union officials are expected to assemble a second time and try and lay ground on these big decisions on expanding the bloc's bailout fund, on plans to recapitalize the shaky banks over there in Europe, as well as also trying to get private investors to shoulder bigger losses on Greek government bonds. So that'll be the key event for the week. But the dollar last week, and really for the month of October, has really started to lose some of its September shine, if you will. The U.S. currency has really come under pressure as a result of investors hoping that Europe's latest attempt to dig its way out of the debt crisis they will be successful at doing that. As a result, that has encouraged investors to move back into those riskier waters, such as stocks and currencies like the euro. That tends to put downward pressure on demand for U.S. assets, or safer ones. Another factor that has weighed on the greenback so far in the month of October has been a recent course of dovish remarks from some Fed officials that has reminded investors that the central bank's door to more monetary easing remains open, given that unemployment remains high and that the housing market continues to struggle to rebound. So again, anytime you hear talk of more monetary easing, that tends to put downward pressure on the greenback, because those measures are really designed to put downward pressure on interest rates, which tend to erode the appeal of the greenback. Once we get beyond these debt talks in Europe, the single currency could come under renewed pressure once again. That's because we've seen a recent string of disappointing data out of the Eurozone. In fact, even on Monday today, we got some disappointing data on the bloc's manufacturing sector. We did see that the Eurozone PMI survey for the month of October actually fell down to its lowest level since July of 2009. So again, that just continued a recent string of disheartening data. Key for the week of the 24th of October will be some U.S. data on housing, as well as manufacturing, and an early look at U.S. growth during the third quarter. So we'll have to see how that shakes out. We'll also, of course, have our sights set on Wednesday. That is when the second EU summit is due to come up with a broad, comprehensive plan to help dig the nation, or help dig the region out of the debt crisis. That's going to do it for this week. You can certainly check us out online.